So, welcome back, viewers. How are you all? I'm fine, and I'm here with ICT Trading Concept again. So, it's been a long week, and after completing this week, I'm gonna actually end the macro session. So far, we have seen that we got 7 entry that perfectly matched with my rules, and all of them were winning. Though I was surprised because it was 100% winning rate, but you have to understand that nothing is 100% certain in this trading game, so you have to be prepared that you will take a losing trade as well. When you will study this macro, I can promise you most of the time you will be the winner, and the losing trade, it will be very rare because it works that way. You have to just follow the rules, that's all. I don't want to talk, I don't want to make my introduction so bigger, so let's go to the video. But before going to the video, I will just show you something. I think it's important to show you. So after that, I will go to the video, and I hope from this last video you will be benefited, and you will actually clear all of your doubts from here. So let's go. Well, actually, I'm gonna complete my macro session from today. I don't want to talk about macro anymore. But if you are new, and also you are older, you have been while for with me in my channel, and still you have some confusion. I told you before starting this week that if you have any doubts, then you just wait until the end of this week. I hope everyone's doubt will be clear. Still, if you have any doubt, then you can just message me. You can comment below the video, or you can just message me to the Twitter. I will try to actually reply to you. And in the meantime, if you have any confusion, you just need to go to my YouTube channel, and from there you can see this is my YouTube channel, and from there you will go to the playlist, and from playlist you will see there is a section called macro. You will go over there, and if you go over there, I'm sorry, my net is little bit slower, so it takes time. Sorry. So when you will come over here, you will see all of this video. Here is 5 video actually, and I will put this video as well, so there will be 6 video. If you go from the first video to last video, you will know everything, and I hope your all doubts will be clear from here. And I would like to say what is it actually. At the first video, I just gave you the introduction about the macro, and the second video I talked about the setup, the rules, and everything, and it was also the analysis from the Monday macro session, then Tuesday macro session, Wednesday, Thursday, and the last video that will be the Friday macro session. I hope this all of this session I have actually cleared what happened in this that week. I described everything. I hope that will clear your all doubts, and I hope that's enough for finding the macro. So let's go to the chart. Wait, before going over there, I would like to show you something. Actually, when macro start, what I do first, before every macro, I go to the 15-minute chart, and from there I just marked the swing high and the swing low. As you will see from my rules, you have to mark your swing high and swing low above the current market price and below the market price. And if I don't get something from 15-minute, I try to find it from 5-minute. If the rule doesn't match, I just skip that macro or that day as well. Secondly, I go to the 1-minute chart. I wait for liquidity run first. You have to wait for liquidity run. And when I will go to today's video, inside that video or deeper the video, you will be understand why I'm talking about this. So I just wait for the liquidity run, then the market structure shift with a fair value. So that is the thing I always try to look for. And third, last is 20 handle run. You have to stop when it will go 20 handle, and it's not small, it's huge. For the macro, you don't need high time frame analysis. That means if you already have so many information or so many knowledge about the market, you have to forget everything when you will be inside the macro. There's something which I don't want to talk about because it's very complicated. So that is actually not important right now. I will talk about that, but later when I'll go another, another strategy, then it will be needed. But right now you don't need that on. So right now you have to just forget everything except the macro. There's two rules. It will take liquidity, then will give you the market structure shift. I don't care about the high time frame where market would like to go. I don't care about anything. I will just wait for liquidity run and then the market structure shift with fair value gap. If I see fair value gap, I will take my entry over there. If I take a loss, I will take it. I will wait for the another macro, I mean the next macro. As you have already seen that last week we got 7 entries and all of them were winning. If you have any doubt, you just watch the videos I have already shown you, I mean to my channel. From the macro section you can see that we had actually 7 chance to take entry and all of them were winning trade. So that's all that's I do when I just trade, depending on macro. Though I trade outside of the macro, but I'm telling you, if you just stick to the macro strategy, it will be enough for you. You will need nothing. Trust me, just nothing. Only macro will give you at least 5 entries in 1 week. That means 100 handle, and that's enough, guys. Trust me, that's enough. Well, so many chit chat. Let's go to the market. So here we are. It's Friday, 29th September, 2023, and I'm gonna start my macro session from 10:50 to 11:10 as we had the news at 10:10 macro. So I'm gonna skip that on. That was my first rule. You have to check the Forex Factory calendar. If there is a news, then you have to skip that on. Okay. And I'm here in 1 minute chart, but I'll go to 15 minute first. I just would like to show you that I'm gonna using the replay mode and it's from 10:50 to 11:10. So the first rule, what I do when the price is just before the macro, I straightly go to my 15-minute chart, and from 15-minute chart I try to find the last swing low and the last swing high. If you see, I have this high as my swing high, and I'll mark that as my buy side liquidity, and the last swing low. If you see this low, this is my last swing low from 15-minute chart. This is my sell side liquidity. Okay. And if you'd like to mark this low, you can mark it as well. All you need just a duration. That means, is there a swing high and swing low where the price is just before the macro. Okay. So here I can see my current market price is here. I have the sell side and I have the buy side as well. So I'll go to the 5 minute for more clarification, and I can see actually from 5 minute this is very nice swing low, and this is my only swing high. Let's go to the 1 minute chart. So why I mark this two level? Why I marked it? It's because I would like to see actually there is two level. This is not from a bias. Okay, I would like to I just need to be sure there is a level where is sell side, uh, I mean, there is sell side and there is a level where there is buy side. I need this two level. That is all. That is all for marking the buy side and sell side. If you see the price is over there and there is no sell side before the price from 50-minute and 5 minute chart, you don't have any trade in that macro. You have to just skip that macro. Okay, it's very simple, guys. It's not complicated. You have to just follow the rules. So here is the market. I don't have any expectation. Yeah, I can see that market actually went above. It has cleared all of the buy side liquidity from there, and then it came lower. It has cleared the sell side liquidity also. In the meantime, it has actually made this relatively equal low. You can see this is the relatively equal low. That is also a very nice sell side liquidity. I mean, just a second. I'm sorry. I'll just mark it as a sell side liquidity. Okay, here. So I can remove this one because where when I have the relatively equal low, then that is better actually. So right now I can see there is my sell side liquidity, there is my buy side liquidity, and you can expect that price will go lower. You can expect that, but you need more information when it will be inside the macro. So let's go with step by step. So here is market. We are inside the macro, and then it went lower. Okay, just look very carefully. You see this low, every swing low there is a there is actually sell side. Okay, so if you look that low, I marked that as my sell side already taken. When market went into this macro, I already marked my sell side is taken. Now my expectation is it will give me a higher market structure shift. This is my expectation. I'm not sure where market will go. You don't need any hard time frame analysis or anything. You don't need it. You just marked it. It's because price can go over there. I will stop when it will actually go to 20 handle. But this is the level where market can go. This is the level where market can go actually. This sell side liquidity. Okay. But you will stop when you will get 20 handle. So let's see what actually market did. Then market went little bit lower. Then I got this candle and this candle. When I have seen this candle, I got my market structure shift over there. You see, this is my very nice market structure shift. Now, what I need a fair value gap. Let's see if market gave me the fair value gap or not. You see, the very next candle, it has closed all the gap. There is no gap. I didn't see any gap over here. What does it mean? That means this setup is not valid anymore. This market structure shift is not valid. This is not valid. It's because though I got market, I mean the sell side liquidity taken, then the market structure shift, but there was no fair value gap. So this is not my market structure shift. I mean the trade setup. So I will wait for more information. And the very next candle, what do you see? You see another market structure shift to the lower portion. What you need to do? You just need to mark this as your sell side liquid. I mean the buy side liquidity taken and your market structure shift. I'll just mark it from here so that it will be easier to understand. Okay, here why I marked this on first and now I'm marking this on second, because when it will be inside the macro, you just need to depend on the price. You don't need to strict with your high time frame analysis. You will just think what is market doing now. First it take the sell side liquidity, then gave you the market structure shift, but didn't give you any chance to take entry because there was no fair value gap. The very next candle it went lower and gave you another market structure shift. Then you can take this one as your liquid taken and the market structure shift. Now what you need a very nice fair value gap. If you don't see a fair value gap, then you won't do anything. Okay, just wait. And the very next candle, do you get your market structure, I mean the fair value gap? I can see this is a very nice fair value gap. I can see it. I marked it as my fair value gap. So if price, I mean market can just come to this fair value gap, and I put my stop loss over here. It's because I didn't talk about the stop loss. I mean the trade management. You will put your stop loss depending on your strategy, or I will make the video about putting a stop loss or a target. I mean target profit, but it will take time. I will do it later. I can deliver everything in one time, and my target is 20 handle. There is your 20 handle. I just think this is 20 handle. So this is my setup. I got my fair value gap over here. I didn't get my fair value gap over here. It's because I'm just explaining everything, because when I was actually I was tweeting before it happening over Twitter, some of you asked me and told me that I should explain why this one is not my market structure shift. The reason is there was no fair value gap. Then I have got this big candle, and then I just marked it as a liquidity taken, and this is my market structure shift. Is there any confusion, guys? I mean, if you see there is a fair value gap, you had I would take my entry over there, then market could go over there. But market is telling you that I don't want to go over there. I would like to go lower. As you don't have any higher time frame analysis, you have to depend on these macro rules, only two rules. It will take liquidity, then it will give you the market structure shift. That's all. And then it will give you the fair value gap. If you get the fair value gap, you will take your entry. So let's see what price did actually. The very next candle, I'm already in the market. Okay, you can see the next candle, and then it went higher and lower. Okay. It's consolidating over there, and then boom. So in that candle, specific in that candle, your trade is over. Now I told you when it was happening over there that it's a high resistance liquidity run. What I mean by that, if you see this time frame, I mean the 10:50 to 11, I was expecting that market will go lower. And in that very moment, if you see the dollar index, it went higher. But before going higher, it was consolidating. Okay, it went higher, then it was retracing over there. Just before the macro, it was retracing. Okay, and then it was consolidating over here. This is something which you have to relate with your Nasdaq. It is always important if you would like to know about high resistance liquidity run and the low resistance liquidity run. But if you think it's difficult, I will go all over this step by step. I mean, from if you are with me in my YouTube channel, you will learn all of this, but it will take time. Right now, you don't need to learn this for being profitable from the macro strategy. I just explaining it. It's because my brother, he actually asked me what is the high distance liquidity run. When I am expecting lower price in Nasdaq, I will expect to see higher price in dollar index. But if it consolidate or it go lower, then you will see the hard time to go to the target for Nasdaq. This is high resistance liquidity run and low resistance liquidity run. Okay, so that was my first trade. I mean the first entry, and if you just mark this on from Monday to Friday, this was the I mean six entry which are perfect. I mean no losing entry. Okay, all of them were winning entry. So now let's go to the next setup. I mean 150 to 210 setup. Well, this is the third macro. I mean 150 to 210 macro, and we are just before the macro. What I do, I just go to the 15-minute chart and I will try to find the last swing high and last swing low. I mean, where the current price is reside, and I can see this is my still my buy side liquidity is over there, and this is my sell side liquidity. You can say this is your sell side liquidity actually. So there is your sell side, there is your buy side, and if you see clearly, you can see actually we have taken the buy side liquidity. Now we are running toward the sell side liquidity. If you mark this low, because this is the most obvious sell side liquidity, I mean the most obvious swing low for from 15-minute chart. So also the relatively equal low, you can say that it will go over there, but my highest sell side is over there. Okay, so let's go to the 5-minute for more clarification. You can see this low, they are the relatively equal low, and price is just near, very near to the sell side liquidity. I'm expecting that price will go and take the sell side liquidity when it will be inside the macro. Now guys, from here you have to listen very very carefully. If you don't listen this or skip or just speed up, you won't learn. Trust me. From here, just listen every word I'm talking, okay? I'm just going to 1-minute chart, and here I am in 1-minute chart. This is the macro, just before the macro. 150 will macro will start, okay? From higher time frame, we know that this is the level where we have the relatively equal low, and price is just before to clearing this sell side. That means from higher time frame, you are expecting price will go lower. This is your expectation from higher time frame, and now it will go into the macro. Let's see. We are in the macro. Okay, this is the first candle inside the macro, the second candle. That means when market came into the macro, it didn't take any buy side liquidity. Let's go further. When it came here, I marked this as my sell side liquidity. That means when I mark this as my sell side liquidity, I'm expecting a higher market structure shift. Higher market structure shift. Just listen it carefully, guys. This is very important. It's because when I outlined this, I mean, I have uploaded this video to my Twitter account and I asked who took loss from this macro. Some of you told me that you took the loss. It's because you are thinking from higher time frame, you are thinking that market will clear this one. You don't need to depend on your higher time frame. All you need to depend in this macro session, okay? Just 20 minutes, guys. In this 20 minutes, whatever you it will do, you have to take your decision depending on this 20 minutes. You just forget everything else. Nothing you need to remember. You see, then I got this candle. What do you think? Do I have any market structure shift? I don't have. If you are confused about shifting market structure, the same thing, you will go to my YouTube channel, and from there the study section you will find a video called how to avoid the loss, losing trade. From there you will know how I mark the swing high or swing low for shifting the market structure. Okay, guys, and that is also very important. Please go and check that video. You will be benefited. So still I didn't have any market structure shift. I need more information. Price went lower and it was this candle. Okay. Now some of you are thinking, okay, price went higher, now gave you the market structure shift. Also, I think yeah, we have the fair value gap as well. Okay. No, guys. When I have seen this, I marked that this one actually cleared this sell side liquidity. Why? The reason is when my prices inside this macro, it didn't clear any buy side liquidity. So this is not my market structure shift. I'm waiting for higher time frame. I mean the higher market structure shift. If it go lower and didn't give any chance, I won't take any chance. I won't take any trade. It didn't meet my rule. The first rule is it has to clear the sell, the liquidity. So far I can see it has cleared the sell side liquidity. I didn't see it has cleared any kind of buy side liquidity. No buy side liquidity it has taken. It just went lower and took all the liquidity from here. Yeah, I can expect that. You can expect that it will go more lower and take this liquidity, then it will give you the market structure shift for the higher price, or it will make some some high, some kind of highs, then it will take that high, then it will give you the market structure shift. Yeah, I can take it, no problem. But so far I don't have any buy side liquidity taken. All I have is sell side liquidity taken. So let's see what market did. And this candle, wait, one more candle here. You see this candle actually trade this fair value gap. And when you will watch my how to avoid losing trade, you will know this is the high, swing high, which is eligible for me to shifting my market structure. Okay. So you have to watch that video for marking the swing high or swing low or avoiding the losing trade. I hope you will be helpful. So when I have seen this candle, I marked it as my shifting market structure. Okay. I was expecting that it will shift the market from here. Maybe it can take the liquidity first, then it can, shift. But let's see what price did. And this is only for macro. If it is outside of macro, there is some another rules actually. So whatever I'm talking about here, it's applicable only for macro, nothing else. And this for macro 950, 1010, 1050, 1110, 150, 210, and 250, 310, only for this four macro. No other macros or outside of this macros. Okay, let's see. And this candle, you see, it has actually shifted. I got my market structure shift by this candle. Now what I need is a very nice fair value gap. Let's see. I got my fair value gap. Do you see the fair value gap? There is my fair value gap. I will take entry for buy. Now, brother, you can ask me, brother, it's very near to clear the sell side liquidity. Why you are taking buy from there? Yeah, there is two reason. I have an video called high probability versus low probability trade. You can watch that video. From in that video, I actually explained which is high probability entry and which one is low probability entry. This will be the low probability entry for me. I I will take this one only depend on this macro. I believe that macro will give me a winning trade. I will take this one depending on macro only. But if you would like to skip this one, it's okay, brother. You have already a winning trade from here. You got a winning trade from here. You already got 20 handle. So you can skip this one. If you think this is low probability and you don't want to take this one, you can skip. But if you believe in macro, you can take that on. Yeah, when you will be, you will take this entry and you will see that market just went lower and stopped, hit your stop loss. So what? You just took a losing trade, nothing else. You have to take the losing trade, guys. You have to. Okay, and I will go for 20 handle. Here is my 20 handle. So if market go into this level cap, I will take my entry. Okay, and the very next candle, I'm inside the the market. And you see market was consolidating over there. Then very big run. You see very energetic run. Some of you will you think that okay, it's gonna take the sell side liquidity from there. I don't care. If it hit me, I will take the loss. What I will lose? I will try to find another entry from another macro. I'm prepared to taking losing trade, but I'm actually believing this macro. All I am saying to you is you have to believe the macro. Sometimes you will take loss. Nothing is, nothing is certain in this trading game, so you have to take the losing trade as well, but you have to believe it. Yeah, sometimes you will take loss, but most of the time you will take the winning trade. So let's see what price did actually, and then boom. You see, is it your losing trade or it is your winning trade? Now tell me, guys. So all the market was doing here is it was actually taking the sell side, then it has given you 20 handle. That's enough, guys. Just believe in it. And now I'm gonna going to the last macro, I mean the 250 to 310 macro. Let's see what happened over there. Well, this is the last macro, I mean 250 to 310 macro. But you know I don't want to go to the 15-minute chart. It's because you already know where is the sell side liquidity. Here is your sell side liquidity, although it has actually went below the sell side liquidity one tick, something like that, but it's a shallow run, so it's not done its job over here. It will come back to come back again later over here. So that is my sell side liquidity and buy side is above over there. So I will see what actually the last macro did, and we are in the macro now. And okay, over there I have got that the buy side liquidity has taken. That is my buy side liquidity taken. Now all I need is a market structure shift with a fair value gap to the lower portion. Okay, and if you see market was okay there when I have seen this candle. Sorry, I was expecting a market structure shift, but you see there is no swing low, which I will mark as my shifting structure. Okay, so I need more information, and then I got this candle. Now this is the swing low which has traded this fair value gap. So this swing low is, I mean, this is applicable, I mean the eligible for shifting the market structure. If I see any candle break this low with a fair value gap, I will take my entry. But the market structure shift, it has to happen inside this macro. That is the rules. And if you see this candle, I just moved it. Okay, you see it didn't break this one, so I can't mark this as my fair value gap. It's because it didn't shift. So, and you see there is no, I mean, there is no trade actually. We are outside of the macro, so we don't have any trade over there. And later you will see that there was consolidation, then some kind of run, whatever. I don't care from over there. But so far, if you see, we had two entry. One was here, another one was here. And with this two entry, we got seven entry this week. I mean, Monday to Friday, we had seven entries, and all of them were, the winning trade, winning entry. Though I was really very surprised because it was 100% proved, losing proof. But I don't want to expect you that you will be winner all the time. You have to be prepared for your losing trade, and that is the rules. If you don't prepare for the losing trade, then you will whenever you will get your first lose, then you will just blow up your account by over trading or revenge trading. So just be prepared, always be prepared for your losing trade. But if you just stick with this strategy, you will need nothing. Nothing, trust me guys, just nothing. No higher time frame analysis, no bias, nothing. All you need is to just follow two rules. When the price will be inside the macro, you will wait for taking the buy side liquidity or sell side liquidity, and when you will get one of them, you will expect the market structure shift to the opposite side. Okay, like here I got the buy side liquidity taken, I was waiting for shifting the market structure lower portion. If I got that, I would take my sell on that fair value gap. That's all guys. After that, if you see that that is a losing trade, don't be panic. Okay, the next macro it will give you winning trade. So that's all for today, and I hope it will be insightful for you guys. If you are new, please subscribe to my channel, and if you think this is helpful for you, please give me a thumbs up, share my videos, and take care of yourself, take care of your family. Have a very nice weekend. See you guys. Bye bye.